What's going on, guys? Welcome back to my channel. This is Blood Phantom 81. So in this video I'm going to be talking about my losers and basically give an update on my losers. I made a video about this topic I want to say maybe 1 to 2 months ago, but I wanted to just basically talk about where I'm at right now with those exact same positions. Now this is part of the reason why I don't necessarily make portfolio reviews, is because it's actually very difficult for my portfolio to actually stay the same over time. It changes all the time, and it actually makes me feel bad if I were to recommend a stock that is just doing poorly. Let's say I cut it loose, but someone else doesn't, or any other scenario just like that. So I never do portfolio reveals for that reason. It's just too risky. But on the other hand, I kind of want to, again, have some closure with what I just already talked about. So the reason why this comes up is because I actually cut down a lot of my losers. Reason being is because I wanted the tax advantages. So two things. Number one, out of all the stocks that I owned that were losers, some of them I was probably down maybe at least like $5,000 on. And so that becomes a tax write-off, which is actually super important if you're someone like me who trades rather frequently. So I needed that help. And number two, you guys know I love to sell covered calls. What happened on this most recent dip, and I have the NASDAQ pulled up here, you guys can see the support level that we bounced off of and now recapture the 50-day moving average. Now it's sort of starting to make all-time highs, looking pretty strong. Again, I don't know if we might pull back a little bit in the short term, maybe retest this all-time high level before heading higher, but I'm really liking where the NASDAQ's at right now. Point is, when we were around here, I bought quite a bit of shares. And I thought to myself, I think if we do have a recovery, there's going to be some drama, some shenanigans. And so I sold some calls right at all-time highs for a lot of different tech positions. And so we actually recovered way faster than I thought we would. And to be honest, I didn't feel like essentially, what is it called? Rolling the contracts? Yeah. I didn't feel like rolling the contracts. So I just basically let them expire in the money. Those got sold. And so I booked a lot of profit in this time period. In fact, we're now sitting at about 482,000. And some part of that is because of basically the tech stocks that I had purchased. And so I booked a lot of profit recently, and that's actually why my cash position is a pretty decent amount, which I'm happy about. Essentially, if we're at or near all-time highs, I don't want to be using margin. Not that I think the market's going to roll over at this point. It's just my personal preference helps me sleep better at night. And so, yeah, so I didn't mind that my shares got called away. In fact, maybe I even encouraged it because I could definitely see us having a short-term pullback, in which case I can also buy in. And on that note, as soon as I realized my shares were going to get called away, I decided that the next week I would sell puts. And so I started to sell puts at or below the 50-day moving average on the NASDAQ. And of course, that means different things across different tech stocks, right? So whether it's Apple or Microsoft or Facebook, etc., they're all going to have their own 50-day moving average. So that's where I'm at with my tax situation. I'm not looking forward to the bill that's going to happen maybe around March, but I'm trying to raise as much cash as I can, both away from my portfolio and with my portfolio by selling premium. Now, let's actually talk about the real reason I'm making this video, which is my losers. Now, if you guys remember, the very first loser that I had was actually Protolabs. Let's go ahead and check out where I sold. So this is Protolabs, currently at about $60 per share. It looks like it's going to break below it, and I ended up getting out at about $66 per share. And so definitely a loss. I think I was probably down around 30% on this one. Now, I want to make one thing clear. I basically did not like the way the price action was looking on Protolabs. Let's go ahead and take a look at what happened to it. So I mentioned a point in which I would get out of the position, right? When I talked about this position, I didn't say I was married to it. I said I liked it, but I would consider getting out if some criteria was met, and that criteria was met. Basically, I didn't like the way we were rejected off of this long-term trend line, which looks to be very, very important. So we got rejected off of this once and then twice, and I just didn't like this reaction at all. So around this time at 66, I sold, and now we're at 60. You know, I don't know what's going to happen with this guy. Proto Labs is kind of in its own niche market. Its price action looks pretty unique to itself in the sense that like it doesn't move like the other 3D manufacturers. Let's go and take a look at something like Stratasys, by the way. So I own Stratasys and I'm happily long Stratasys. Let's go and take a look at my position real quick. So Stratasys at the moment is probably my favorite 3D printing stock, and I sort of again I want to apologize if people do the same trades that I'm doing and they just maybe get left behind or something. I really hate that, and so that's why I'm usually pretty mindful about these portfolio reveals. With that said, I haven't changed my stance on 3D printing stocks, just the stocks that I own. So I'm actually still very bullish on the 3D printing industry as a whole. So Stratasys has actually been crushing it lately. You guys saw my position. It's up over 30%, I believe. Taking a look around, we see some other 3D printing stocks like X1, which is also doing fairly well. So that's ticker symbol XONE. Let's go and take a look at 3D Systems as well, also doing relatively well. All looking pretty good after this pretty sharp retracement back in May. And so, yeah, I mean, remains to be seen. There are some leaders like 3D Systems, in my opinion, that basically lead the way, I think are sort of leading indicators. I'm going to make the assumption that it's going to break out to the upside. And so, yeah, I can absolutely see a stock like 3D Systems, ticker symbol DDD, basically break all-time highs within the next maybe 1 to 2 years. Again, I'm not putting my life savings in 3D printing stocks, but I'm very happy with the potential upside. If you think about it, 3D Systems is currently at what, $30 a share, and this is at $100 per share, right? And so, yeah, 3x potential from here to back to its all-time highs. Yeah, I'll definitely take it. All right, and then moving on away from 3D printing, which again, an industry I'm very bullish on, depending on what stocks we're talking about. And right now, I like the manufacturers like Stratasys and X1 and 3D Systems. I also want to talk about some genomics stocks. And so probably my largest genomics holding at the moment is CRISPR. Now, I actually did something a little bit crazy here. I ended up buying more shares of CRISPR. What a novel concept. When a stock goes down that you like, you end up buying more shares of it. And so this one's a little bit different than, let's say, something like Proto Labs, in which I'm not really looking to exit. I don't really have much of an exit plan, if I'm being completely honest with you guys. Let's go ahead and throw on the 100-week moving average. So we actually lost the 100-week moving average, but we have the 200-week coming up, and then we also have this area of support, which I would definitely expect us to hold. And I become a very, very excited CRISPR shareholder if we ended up going to about $80 per share. In fact, if that happens, I can see this position increasing by about 25%. I can see myself buying about anywhere from 50, maybe 40, anywhere from 40 to like 80 shares, let's say. So obviously that's more than 25%, but in that ballpark, because I would become a very excited CRISPR shareholder. Now, what you'll notice is that there's a couple genomic stocks that are here in the top losers list, right? There's CRISPR and there's Invitae. Let's go ahead and take a look at Invitae. And we see something very similar. So Invitae is also at this very important area of support, in my opinion, which I've been using this area to accumulate. Every time I retest it, I always buy a little bit more. Let's go ahead and take a look at my Invitae position. Now, again, remember, I'm down 19% on CRISPR. Invitae actually isn't even too much different. I'm down 17%. I did another very novel concept. I ended up buying more shares of this guy. So I bought about maybe 25 shares at about 27.29. So not a massive purchase, but just as you guys can see, little by little, I'm starting to buy, at 27, at 28, 50 shares here, 25 shares here, not 25 shares today. So I'm still bullish on genomic stocks, and I think they all move very similar. Let's go ahead and take a look at my actual favorite genomics company, which is Pacific Biosciences. So this one looks a lot different. We haven't even retested any major moving averages on the weekly time frame. And then on a daily time frame, we basically have this cluster. Now this company actually looks the most similar to ARK-K, where ARK-K obviously had this low here in May 2021 of this year, and it had another low here in October. And it looks like we're sort of just hanging around this cluster of moving averages, right? I mean, look how noisy this is. Let me go ahead and get rid of some of these sort of areas of resistance. So this right here is an important area of support, in my opinion. And what you have here is this cluster, a cluster moving averages, in my opinion, that is sort of holding it back. But I do think that once we reclaim the 200-day moving average, which is where we're at, we probably want to make another shot at this high right here back in June. So maybe we retest after that. Maybe we, retest that area, come back down, sort of hang out a bit. And then I could definitely see innovative stocks kind of having their day again, just as long as this consolidation gets resolved. And I don't know, I'm feeling bullish in the long term. I don't think this low is going to break that was here in May. I don't even think this low is going to break that was here in October. And so I'm going to go ahead and say we're almost like basing here, consolidating, and then I'd like to see RK recapture this 200-day moving average. Go ahead and take a look at Pacific Biosciences, which again is pretty similar, right? We had this low here and then this low here, and now we're sort of in this cluster of moving averages. And so, yeah, same picture here. I'd love to see us reclaim the 200-day moving average, and I can see Pacific Biosciences basically take off. All right, so we talked about 3D printing. We talked about genomics. Lastly, well, not lastly, but close to lastly, rhymes with fastly, we're actually going to be talking about HYLN. So very, very quickly, HYLN. Just a quick update on this guy. So yeah, HYLN actually ended up going below $7 per share here on October 12th. Now let's go ahead and take a look at my position. So I did not manage to scoop up shares below $7 per share, but I did manage to scoop up shares below $750 per share. So I got 100 shares here at $748, and then 25 shares here at $748 again. So that was just a couple weeks ago, and so I'm kind of just watching this guy. I'm not really buying too much, and to be honest, like this is just a pretty simple view, right? Like nothing too fancy about this. We have moving averages that are sloping downwards and sort of act as resistance every time we hit them. Actually, let me go ahead and get rid of this guy so it's a little bit more clear. I mean, there's really nothing more to say than that, right? Like moving averages acting as resistance until we recapture them. I don't really see that changing. And yeah, I mean, this is just a pretty common downtrend for me personally. I wouldn't really buy unless we get below $8 again. I'm not saying that's going to happen. I'm just saying I think I have enough HYLN at the moment, and not really excited to be buying more here, even though I should, right? But it's just that my position is large enough in my opinion. Moving on to some of the real estate stocks. So Zillow and Redfin. So pretty big difference here. I am down about 1,300 on Zillow, and I'm basically flat on Redfin. So let's go ahead and talk about Zillow. I actually ended up increasing my position a lot more. And hang on a second. It says post here at 77.50. Did Zillow crash down after hours? In which case that would be awesome. Let me see. Zillow stock. I don't know why I spelled it wrong. Wow, it certainly did crash down. This is actually news to me. So you're getting a live reaction of me seeing Zillow at $77 per share. Dang, it's actually already past after hours here in California, so I guess I can't buy it, but that's actually pretty incredible. Yeah, absolutely. I will be taking some more. Oh yeah, definitely. I mean, if we get like 72, 71 right here at the 200 week moving average, and then you got this trend line here. Get out of the way. Brush pattern. Yeah, dude, I'll take that any day. Again, you're getting a live reaction of how I think about stocks that I like. So yeah, I'll definitely take that. I'll be placing an order right after this video actually to buy some more shares early morning. And Redfin is looking a little bit more bullish, holding up at the 100 week moving average. Not really much to report. I probably wouldn't be buying more unless we break below this. Maybe start retesting like the 40, high 30s areas. So yeah, nothing much to report there. Lastly, let's talk about FSLY. So FSLY is a position I'm not too crazy about. You guys know that. You guys know that Cloudflare is the #1 content delivery network. I mean, look how beautiful this is. Untouchable stock hiding in plain sight. No-brainer investments. Cloudflare. I mean, just fantastic company, fantastic stock. Gotta love it. Fastly, on the other hand, this is like Cinderella's rude stepsisters. Not only are they mean, but they are also ugly. And I mean, that's actually a product of Disney culture, right? Is that the uglier you are, the more evil you are. Why can't they have, good looking evil characters or vice versa? Anyway, so what we have here is potentially some kind of bottoming pattern, but we do have these moving averages that are sort of going to be acting as resistance, in my opinion, the same way they did up here, same way they did up here. And so, yeah, Fastly has some work cut out for it. So what am I doing with my Fastly position? I'm actually, this could be a very dumb thing, and I honestly I acknowledge that, but I'm looking to get out with not much profit. So my average cost is just shy of 52, and I'm selling covered calls at about 55. And this was worth like $200, so I'll take it. This expires what, in a few weeks? So yeah, I'll take $200 every 3 weeks, any day of the week. And so yeah, I mean, the reason why I say this might be kind of dumb is because I could absolutely see this like really start to take off. It's not that large of a company yet. I mean, I think it's under 10 billion if I'm not mistaken. Let's actually go ahead and do some live research. So yeah, it's about 5.75 billion. So I mean, I could see this being a $10 billion company, to be honest, in the same way that it was up here at about $100 per share. So yeah, I mean, we could easily blow right past the strikes that I'm selling at. I probably wouldn't even roll the contracts, to be honest, but I'm just using this as just like a passive income stream. And just wrapping this video up, talking about the Nasdaq. I mean, just look how gorgeous this retest is. Now we're breaking out to all-time highs again. I wouldn't be surprised if we do have a short-term pullback before continuing higher, but yeah, I mean, just a great chart. And as a result, that's why like I'm kind of starting to get rid of some of these weaker positions, and especially once the Nasdaq sort of crashed down, that's exactly what I did. I used those weaker positions as a tax write-off, and I got into positions that I know would actually recover if the Nasdaq recovers. And guys, there's just so much. The sentiment is just so much different with large cap tech versus hyper growth. I'm not saying hyper growth is not good, because it is and it has its moments. But at this particular point in time, I felt a lot more comfortable with large cap tech, and I think that was the right decision, to be honest. So we'll wrap up just talking about my portfolio. So yeah, currently at about 481, and this actually counts the amount that I've been withdrawing for closing costs for my property, for the down payments. And so it's quite possible that I think I'd probably be closer to 500 if I never had to pull money out for the property. But regardless, I think I should still hit 500 this year. And at that point, I don't think I'll have to pull out any more money here. I'll just use my paychecks coming in every month to fund my real estate venture, and then just have this portfolio basically fund itself through covered calls and cash secured puts, or margin secured puts, if I need to. So yeah, that's going to wrap up this video. Thank you guys for watching, and I'll catch you in the next one.